It began with a screen that suddenly said you can't buy. And in that moment, millions of people realized the rules of the game might not be what they thought. January 2021 felt different from the start. The country was still recovering from layoffs, missed rent payments, rising credit card balances, and stimulus checks that barely covered essentials. People were stuck at home, watching their savings shrink, their interest rates pile up, and their financial future feel smaller by the day. Then, almost out of nowhere, the stock market became a battlefield, and everyday people were winning. GameStop, a struggling retail company, wasn't supposed to skyrocket, but it did. Thousands of retail investors, many using the Robinhood app, began buying shares, pushing the price higher and higher. Some were driven by online forums, others by pure desperation. When your credit score is barely holding up and your savings account earns less than 1% interest, a sudden 100% gain doesn't feel like speculation. It feels like survival. For the first time, people who had never touched the market before were seeing real profits. A delivery driver turned $1,000 into $8,000. A college student paid off high-interest debt. A laid-off worker finally had breathing room. It wasn't just money, it was hope. And that hope spread fast. Robinhood became the center of it all. The app made trading simple, almost too simple. No commissions, easy approvals for options trading, and instant deposits that let users invest money before it fully cleared. For many, it felt like financial empowerment. But beneath that simplicity were layers most users didn't fully understand: margin accounts, settlement periods, and something called liquidity requirements. Then came the moment no one expected. Users woke up one morning, opened the app, and saw that they could no longer buy certain stocks, including GameStop. Selling was still allowed, but buying was restricted. At first, it felt like a bug, then confusion turned into panic. Imagine watching a stock you own start dropping fast, knowing you believe it could go higher, but being physically blocked from buying more. The price falls, fear spreads, and people begin to sell, not because they want to, but because they feel trapped. And here's where it gets personal. Some users weren't just investing spare cash. They were using margin, borrowed money from the brokerage. That means losses weren't just losses, they became debt. If the value of their investments dropped too far, they could face a margin call, forced to deposit more money, or have their positions liquidated automatically. So when buying stopped and prices dropped, it created a chain reaction. Losses accelerated, accounts shrank. And for some, gains they thought were locked in just disappeared. At the same time, questions started rising. Why would a platform built for retail investors suddenly limit them at the exact moment they were winning? Was this about protecting users, or protecting something else? Behind the scenes, a less visible system was under stress. Every trade you make doesn't settle instantly. It takes time, typically to business days. During that period, brokerages must maintain collateral with clearinghouses to ensure trades can be completed. When volatility explodes, those collateral requirements can skyrocket overnight. And that's exactly what happened. Robinhood suddenly needed billions of dollars to cover its positions. Not millions, billions. If they couldn't meet those requirements, the platform itself could face serious consequences. So they made a decision, one that would instantly impact millions of users. But here's the part that made people uneasy. Most users had no idea the system even existed. They thought they were simply buying and selling stocks. They didn't see the hidden infrastructure, the clearinghouses, the liquidity constraints, the financial obligations happening in the background. To them, it felt like the game was paused, but only for one side. Trust began to crack. If a platform can stop you from buying during a critical moment, what does ownership really mean? If your strategy depends on timing, but the system can change the rules mid-trade, how do you protect yourself? For many, the financial damage wasn't just about money lost. It was about confidence lost. People who had just entered the market trying to escape debt, build savings, or finally get ahead were suddenly questioning everything. And there were lessons hidden inside this chaos. Easy access doesn't mean low risk. Margin amplifies both gains and losses. Volatility can turn opportunity into danger within minutes. And most importantly, if you don't understand how the system works behind the screen, you're not fully in control of your money. Because the truth is, the market isn't just numbers moving up and down. It's a complex machine with rules, pressure points, and moments where decisions happen far above the level of the average investor. And when those moments